My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to save you a little money. My job is not just entertain, but explain days like today. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. People have it all wrong. On Wall Street, we celebrate Halloween by saying trick and then treat. The trick is what happens when great companies report their earnings. The treat is the payoff for sticking with their stocks, even when everyone else panics. Because there's some part of their earnings statement that doesn't please a small group of hedge funds who take action on anything, even things that don't matter. I know markets can be opaque, especially on sessions like this, the last day of what should have been a turbulent month, right? Dow lost 378 points. S&P plunged 1.86%. NASDAQ plummeted 2.76%. For example, some money managers are dumbfounded when a very good company reports a very good quarter, but then issues a very conservative forecast. They take the forecast as gospel. They believe that management's truly worried about the future, so they get scared. The trick. And then they sell, and they miss sell the tree.
That was easy.
It's almost as if they believe that the candied apples we used to get when we were younger, they were given by the Tuckers in my neighborhood. Can't miss that house. Will turn out to have razor blades in them. It's insane how frightened shareholders can get. Yeah, by the way, you can see the footsteps of those who lack fortitude simply by examining the charts. They're the ones that cause the dips. And those dips give you a chance to buy high-quality stocks at a discount. And that's a chance you can't afford to miss in this market. Yeah, on days like today. Hey, did you hear anyone else say that? I mean, like, did you hear everyone say let the sellers have their way today, but you can start buying tomorrow? I mean, it's kind of my mantra. Let's go over some pertinent examples so you know what the heck I'm talking about. Microsoft. Last night they reported and the earnings looked terrific as usual. The stock immediately started popping in after-hours trading, even as I warned you not to touch it until we heard from Amy Hood, the implacable CFO who became the keeper of the forecast more than 10 years ago. Microsoft has a calibrated reporting game plan. They start the call later than almost every other company, 5 p.m. Then in the heart of the call, Amy tells you the numbers, and then she gives you the forecast. More than 10 years she's done this, probably 40 calls. You never know what the future holds until you listen to what Amy says about the forecast. Yet people are always eager to trade off of something, somewhat, any meaningless initial headlines rather than waiting to hear the full story. And that's just what they did. Last night, Amy talked about how one of Microsoft's key divisions, their Azure cloud infrastructure business, had so much demand that they couldn't meet all of it, meaning Azure couldn't make as much money as they would have liked. That led to a bit of a guide down the current quarter, although Amy says the company will make up the difference and then some in the back half of their fiscal year, meaning the first half of calendar 2025. And, of course, that sent the stock down, and all those people who bought it up looked like idiots, and they are. They're what I call jamokes. This quarter's sales could be a $1.3 billion light. Not great. But given that this is a $68 billion business, you mind I'm not sweating the program? Here's why. For as long as I've known Amy Hood, and that's probably about 3 decades, she's been conservative in giving outlooks. That's her nature. It's a big reason why she's so great at her job. She never overpromises, and she's more than likely to over-deliver on her projections. If you look at her body of work, that's what she has done over and over and over again. Incredible track record. But traders don't look at a body of work, for heaven's sake. They don't know Amy from Adam. Drives me crazy. So, of course, the stock, which is only up 8% for the year, now gets clobbered, fell 6% today. In fairness, that move makes sense if you don't know Amy Hood, who's one of the most exacting CFOs I've ever met. If you do know her, though, this pullback is ridiculous, facetious, fatuous, and lacking in any sort of rigor. Yep, this sell-off, ladies and gents, is a classic example of missing the forest for the trees. The Azure guide down is a tree, maybe a stunted birch tree, maybe even one of them weeping weed trees like the weeping willow in a forest of greatness. And Microsoft is king of the forest. Microsoft's greatness comes from its execution of its grand strategy to dominate the enterprise's use of artificial intelligence. So far, that strategy has been a stunning success. I should add that nearly 70% of the Fortune 500 uses Microsoft 365 Copilot. That's the farce. There was a lot of woe is me about how much Microsoft's spending to come up with an alleged forecast shortfall. False narrative. True narrative. In a time when both the Justice Department and the FTC are gunning for any dominant tech company, even if that dominance comes at a tremendous cost with the potential for utter failure, Microsoft simply can't say what it's trying to accomplish straight out. I can do it for them. They will have total dominance of AI in the enterprise market, a remarkable feat, and they did it in only about a year's time. You may want to say that's not worth anything and lock in some gains. I say, yeah, fine. I always taking profits, good thing. But I say let it ride. That's what we're doing for the Travel Trust. You should do it. Fortunately, they spent a lot of money to stay dominant. I don't mind that either. How about Meta? Another one that got clubbed today. I mean, just crushed, 4% down. Here's a company that has 3.2 billion daily users, and that's a lot of the planet, isn't it? Can you imagine the advertising program they can work with, this kind of user base, the targeting, the precision, the return on investment? I think everyone's underestimating their ability to dominate the digital advertising market. Meta's seeing rapid adoption of its AI wares, including I like them, the AI-filled Ray-Bans. Most important, 500 million people use Meta's AI platform. And Mark Zuckerberg says it will be the largest of the generative AI platforms by year-end. Meta AI is spectacular. If you haven't used it, it's smart. It's funny. It can devour video. By the way, that's a clear sign that NVIDIA's Jensen Huang's at work here, because NVIDIA's most recent advanced AI chips excel in processing video. Again, in an era where the government wants to stamp out corporate dominance, even if that comes at the expense of our amusement and our intelligence, Zuckerberg can't simply crow that we own the consumer. Don't come near us because we will outspend you. All that does is give you a one-way ticket to the Justice Department for a beating by the figurative rubber hose of antitrust. Dominance. Dominance, whether it be in the enterprise or the consumer, costs a lot, but it's good to be the king. Hey, speaking of internet royalty, Amazon reported a strong quarter after the close, sizable revenue beat paired with a monster earnings beat, even though the revenue forecast for the current quarter fell short of expectations. I'm sure someone will freak out about that. Their operating income guidance was excellent because they've been very disciplined about controlling expenses, so the stock caught fire in after hours trading. Again, Amazon is spending like mad. Why? Because they want to dominate retail, whether it be Prime with advertising. Along with that dominance, of course, comes with the most lucrative cloud business. As for Apple, oh, there's been so much doom and gloom. I mean, oh, geez, I mean, wow. I mean, really. We were told so many times that the iPhone 16 was dead on arrival. We knew there'd be a guide down, and they gave us a guide down. Even as I say, own it, don't trade it, I recognize that the consensus going in for the next quarter, 6.8% growth, was not going to be met. I told you this repeatedly. Repeatedly, I told you that. It was way too high. I told you that. I said the stock would go down. I told you that. Apple's looking for low to mid-single-digit growth now. It's exactly as I said. But to me, Apple's a changing story. It's going to be less about the release of iPhone and more about the software. I think that word of mouth on each new phone, each new piece of Apple Intelligence software, each new update will spur growth. I am glad the guy down is now out of the way so we can actually concentrate on what a terrific company Apple really is. Oh, by the way, that matters too. Who would have thought it? Here's the bottom line. Don't let the action trick you into selling stocks of great companies that, when you do the homework, are actually doing very well. These are the dominant companies. Ultimately, you sell them at your own peril. Brian in Maryland. Brian.
Admiral, permission to come aboard stock ship Cray America.
Oh, man, welcome aboard, Chief. What's happening?
Well, I have a stock. I confess I've traded in and out of this stock in the past to good effect. Okay. About 1 year ago, there was a relatively big pullback, and I bought some shares intending to hold them. Within a few months, they were up about over 40%, but recently they've given back about half of that gain. Jim, this is a company you have mentioned several times on air, but do not hold in the trust portfolio. Should I continue to hold or revert to treating this as a trade? It's McKesson, MCK.
McKesson's look, what can I tell you? They're a middleman. Now, they'll tell you that they have expertise, blah, blah, blah. I will tell you this, boy, they coin money. I mean, McKesson, you sell McKesson. I mean, the stock's been going down. So remember, it is an election year. People don't like these companies. As soon as the election, what is that, over? It's like next week or something. I'm like here for like 4 days. I have a cot. I don't care. But you know what? After the election, that stock's going to go up. Let's go to Trey in Texas. Trey!
Jim, as you know, I've liked Wingstop for a long time, but I recently had to part ways with my shares. No matter how delicious the Bayou barbecue is, it's difficult to justify chicken wings at 120 times. Therefore, I've taken my capital and my appetite over to Chili's. And, Jim, I think I speak on behalf of all my fellow baby-back bulls when I say we love having legendary CEO Kevin Hochman at the helm of Brinker International. What a rally. Will it continue?
There were 2 downgrades today, and at one point the stock was up $3. I mean, these downgraders, they don't know what they're talking about when it comes to Brinker. I've been thinking a lot about Wingstop, and I've got to tell you, here's my problem. I follow about 1,000 companies. Actually, I follow about 4,000 companies because I don't sleep well. It's been a problem all my life. And one of the things that I found does matter. And look, this may just be, it could be something, a quirk in my brain, but I care about earnings per share, and their earnings per share were awful. There's nothing I can do about it. I want not to think about it. I go to bed and I think about earnings per share, and that's my problem, not theirs, because they don't worry about it. Lucky them. Let's go to Mark in Pennsylvania. Mark.
Big booyah to you, Jim Cramer, and happy Halloween.
Oh, man, I'm playing myself.
Long time listener.
I'm going as myself. There's a really good Twitter or X or whatever he calls himself, the richest man in the world, about me putting on a little makeup in the show. If anyone want to watch, that's a good tweet. Thank you, Dylan. Thank you, Heather. Heather, 2 shout-outs in one day. What's going on?
I got a question for you about CCJ. Before they announce earnings, I'm curious if it's a good time to buy.
Oh, well, look, I talk about this a lot with Ben Stoto. You know what? I'm just going to give in. If it has to do with uranium, I give up. Buy. Just go buy it. I don't care anymore. And Wingstop, I'm sorry I went off on you. I like your wings. I just thought that the EPS thing should have mattered more to you, because it sure as heck mattered to me. Remember, it's not trick or treat on Wall Street. It's the trick and then the treat. The trick is when the stock sinks after earnings because people don't know what to do, but they're hedge fund guys. They make for a living not knowing what they're doing. That's fine. I did it myself. But the treat comes when you stick with it after everyone else is panicked. Then you pick it up and buy. Okay? I know who Wingstop is. They're Sam Gerard. They're from The Fugitive. Yeah. Earnings per share? I don't care. I'm Mad Money tonight. Industrial gas company Linde crossed the tape today with an earnings beat, but has lowered guidance and cause for concern. If it has earnings per share, I've got an exclusive with this longtime club name. Then the maker of Sensodyne and Flonase missed Wall Street's mark a little bit, but you know what? What a winner it's been. Let's check back with the CEO. Plus, Clorox top brass is joining me. I cannot believe they could come back after that hack, but they came back stronger than ever. So stay with
House of Pleasure.
Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.